Would opening international borders overheat the property market? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article written by Samantha Menzies from Yahoo Finance, discussing could the Australian property market overheat after the borders open? Now, there's an interesting question, because one could argue that it's actually overheating right now, at least in the housing sector. Apartments, not so much. Not so much. Now, will a flood of migrants, international students, and foreign investors just pour more fuel onto the property market? Probably, if it happens. So, the reopening of Australia's international borders could have the potential to put further pressure on already high house prices and even overheat the market entirely, experts warn. Recent CoreLogic data shows Australian house prices jumped a huge 2.1% in February in what was the largest month-on-month increase in 17 years. The data showed that Sydney's median house price increased by 4.8% over the last 3 months, while Melbourne's median house price rose by 4.2%. Just after we've had our first recession in 28 years. Could this be why? I mean, are people worried about rampant inflation? Are people worried about, borders opening and housing going up, more competition? So they're trying to get in. AMP Capital Chief Economist Shane Oliver told Domain Group that a careful and slow and gradual reopening of international borders is needed to ensure a sudden spike in housing demand doesn't send house prices skyrocketing even further. He points out that rather than allowing immigration to suddenly jump back to what it was before, by gradually phasing back its return, the property market would be able to adjust without becoming even more overheated. Yeah, but we know what the government's going to do, don't we? They will open the floodgates, bring everyone in. You'll see a spike in housing. Everyone will say, and then they'll say, look at the GDP, look at our fantastic economic management, vote us in. Am I getting too cynical there, guys? Or could that be what will happen? And then what do you have? I mean, you have Albanese. What's he going to say? You ever even see him on TV? We get more exposure from Shorty than Albanese. If we were to allow a return to normal immigration levels, then you're suddenly doubling demographic demand again at a time when the market is still hot from low interest rates. Then that could cause a real problem in terms of adding pressure on prices and worsening affordability, he said. The migration influx would also come at a time when the property market is already experiencing strong demand thanks to a palpable change in market sentiment, which has emerged, which has translated into strong buyer activity at a time when there isn't much good stock on the market. According to property investment expert Michael Yardney, there is already a perfect storm of factors suggesting that 2021 will be a great year for property investors. So here's the perfect storm. Consumer confidence has gradually improved, as has business confidence. COVID numbers are very low, and the prospects of the success of our vaccination program is excellent. I mean, here in Queensland, it's not even something I consider anymore. I've completely forgotten about it, at least with my day-to-day shopping. It's quite rare to see anyone even bothering wearing a face mask, and they're probably just wearing it because they got someone else. You know, I live in the Asian part of the city, guys, so it's a cultural thing. Often you have Asian people, more than other cultures, will wear masks if they're sick, so they don't spread the illness. Before it became, mandatory. Our economy is improving faster than many expected and likely to grow strongly in 2021. Auction clearance rates, beloved auction clearance rates, bloody hell. Always about the auction clearance rates. Is he going to talk about search results? Auction clearance rates remain consistently strong, not just in the two big auction capitals of Melbourne and Sydney, but around Australia. While more buyers and sellers are in the market and transaction numbers have increased considerably, the lack of good quality properties for sale has created a seller's market, where buyers have little choice and are pushing up values of A-grade homes and investment-grade properties. At the same time, the banks are keen to write new business, another positive for our housing markets. Bank loan deferrals have been falling. There's no chance of an avalanche of forced mortgagee sales, as many were worried about last year. The guarantee by the RBA of interest rates remaining low for at least 3 years is giving home buyers and investors confidence to commit to purchasing properties. Moving forward, further job creation, consumer confidence and business confidence leading to spending and employment will underpin our housing markets. So when will migration levels return to pre-COVID? According to the Centre for Population, it could be 3 years before net overseas migration returns to pre-pandemic levels. In the last full financial year before the pandemic hit, Australia's net overseas migration was 239,000. Well, yeah, I think there's an extra zero added there. It fell to 154 in 2021 financial year and is forecast to drop to negative 71,000 this financial year and to negative 21,000 in 21-22 before returning to positive growth of 95 in 22-23 and 201 in 23-24. The National Housing Finance and Investment Corporation has warned that housing affordability could worsen from 2023, particularly if supply doesn't respond to demand when it recovers on the back of international borders reopening. So what will happen to our property markets if borders don't open? Economist Sol Eslake recently told the Sydney Morning Herald that recent gains in the housing boom are unlikely to be undone. I would say the rise in house prices is probably sustainable, he said. Indeed, we could see further gains in many regional capitals as people adapt to the opportunities created by the more widespread acceptance, at least for white-collar occupations, of working from home. Much of the demand is coming from first-home buyers who appear to perceive an opportunity to get into the housing market without facing the competition from cashed-up immigrants or negatively geared domestic investors, which has squeezed them out of most of the preceding 30 years. But Westpac warns that prolonged border closures could hurt house prices from 2023. If borders remain closed for longer or migration inflows are slow to restart, that could lead to a market-wide physical oversupply of dwellings by 2022, the bank said. How that may influence market conditions and price growth is unclear. So, there we have it, everyone. What do you reckon? I suspect our politicians are going to do everything they can to continue the bubble in property growing so they can claim fantastic economic management and stimulus of the economy. But you can't run forever. You can't kick the can down the road forever. How it's causing a lot of social issues. The K-shaped economic recovery is just going to be exacerbated by this. Generations are going to be burdened with a tax responsibility, and they're essentially pricing themselves out of the housing market due to government stimulus. Awesome. What do you reckon? Do you think we'll see immigration ramped up again to prop up property, or will it just fizzle out? Let me know your opinion on that one in the comments down below. Thank you all for watching. Please like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. Have a great day. I'll see you next time. Bye for now.